All right, it is time for our special segment, Charting Trends, to talk about some of the bigger technical trends that you can look out for as you look at your trading bets. Sacchitanand Uttekar of Tradebulls is with us to decode the market from a technical perspective. Sacchitanand, thank you very much for joining in. First of all, wish you a very, very happy new year, happy 2024. I guess we are starting the year at a very interesting juncture because we're coming off after a very heady rally, especially the last 2 months. And now it seems the market is sort of, taking a little bit of a breather. But you tell us, are you expecting more consolidation or could there be more volatility? And, how should one be positioned given the rally that we've seen in the last few weeks?
Well, firstly, a very happy new year to you and all the viewers of CNBC TV18. Clearly, I think the trend and the momentum from a market perspective has been very robust, especially if you look at the last 8 weeks of Nifty's trending move. We have already seen a very strong, consistent high top, high bottom base here. On the weekly basis, it has managed to trend above its 5-week exponential moving average support. Currently, this particular support is placed at around 21,560. So until unless we don't see the Nifty, breaking this particular support, the chances of a change in trend looks bleak. As of now, I think if you look at the exhibit here, since the way Nifty started trending above that 19,200 kind of a mark, somewhere close to the October series. Since then, the Nifty has been maintaining a very gradual, move. The acceleration has been very robust in the month of December itself. But if you look at the continuity, we expect that this particular trend may continue towards 22,000, 22,240 when we look at the major trends. From a daily perspective, yes, we are seeing some bit of a consolidation here. For the last few trading sessions, we are seeing some profit booking pressure. And if you look at the daily RSI, the exhibit 2 that I have shared, clearly, we are seeing that the RSI has been on a declining trajectory wherein the prices have been rising higher. So this is a classic case of a negative divergence. But we are not expecting any major change here. Probably a pause is something that was likely, and this is what has been exhibited by the index even right now. So I think from a trading perspective, until unless Nifty holds itself above that 21,500 mark, any declines on the lower side should be utilized to create some long positions. The major trend stop loss still stays at around 21,120 on a closing basis. And from a trading perspective, in case if we see a decline towards 21,500, 21,600, I think that will be again a good, healthy opportunity to create some aggressive long positions here when it comes to market.
Sacchitanand, just repeating those levels for the benefit of our viewers because we're exactly trending to those levels now. It's a very decisive leg down. By the way, 100-point decline on the Nifty today. The market obviously broke yesterday's low in a jiffy, and now we're at 21,630. You're saying till 21,500 holds, get in and buy, right?
That's right. And keeping a stop loss somewhere close to around 21,120 on a closing basis. I think, the trade setup still remains positive. The high top, higher bottom sequence only gets distorted in case of Nifty starts trending below that 21,120 mark. So the support at 21,560 remains healthy. So any declines towards that particular support would be a good opportunity to create some long positions.
All right. You do like some of the pharma stocks. There's DrReddy is also on your list. Just take us through that. What's the outlook there?
Well, Sumi, I think we've been covering Nifty Pharma on this particular segment. We highlighted Nifty Pharma breakout from a rounding formation in the month of November. And since then, we've already seen the pharma index, scaling by almost around 12%. So if you look at the current structure on the monthly basis, this looks like a classic bullish flag pattern breakout. Now, a bullish flag is a continuation pattern which is exhibiting a price target somewhere close to around 17,940 and 17,500. These are the approximate levels that we are, expecting. And this has come after 4 months of consolidation. So I think the rally and the trend should continue going forward in Nifty Pharma. This is one space where we have been recommending some aggressive long positions. And if you look at the setup of DrReddy's, on the daily scale, recently we have seen a kind of a double bottom formation at around 5400 levels from where we saw a lift off. Its daily ADX has now started trending about 25, which is again a good sign of strong directional momentum play, and that's why we are expecting that this particular swing could continue towards 59.86 on an immediate basis, and this is the juncture wherein we have seen some resistance. I think this particular resistance may be surpassed during this particular move, and we are anticipating that this momentum could continue right up to around 63.70, and that's why we are recommending aggressive long positions even at this juncture in DrReddy's.
Got it. Okay, all right, Sachi. Always good to hear your thoughts. Thanks so much for joining in. We'll track that one. DrReddy is the last one that you spoke about. By the